morning. It is Tuesday, March 11th. It wasn't bloody Sunday, Sunday, bloody Sunday, like you two sang for all you old timers. But boy, it was bad yesterday. And the title of this one's you don't know what risk tolerance is until you have a day like yesterday. I lost more than I made in 2 years yesterday as a salaried worker. So yesterday, yes, it's hard. It is difficult. We're going to go over everything that you can do now. We're going to go over a couple of strategies. We're going to go over some of the ones that are beaten down. This is not the end. There will be more downside. There absolutely will be more downside. So as you listen to this, understand that I have my tools open. Okay, my first tool is QQQ. And you may say, well, I don't know anything about technicals. I know nothing about technicals. Well, it's pretty simple. When you have a previous all-time high, just like you had back here at 504, look, it provided right here in January, that provided the first level of defense, and then we saw it bounce up. And you saw a nice little double top around 538, 540, and then we just lost it. The middle of February, we just lost it. And now the 50 days moving negative, the 200 days moving negative. And when you look at a weekly, it looks just like a dip, just like this in July 2024. It looks just like this in March of 2024. It looks just like this in 2023. And boy, are we going to go into a 2021, into 2022, kind of like this? Could be. Could be. Again, that MACD was too high on the weekly. The RSI, too high on a weekly. We are overbought, oversold right now, I should say. So you want to have a strategy. And you may say, well, what's my strategy? My personal strategy, the 4-hour algorithm. What is the 4-hour algorithm? It is based on the MACD. So it's based on indicators, and it's a technical strategy. I have it for all of my stocks. Okay, the 4-hour algorithm is the same formula. And it has proven to me that I can manage my portfolio using this. Look at when it got you out. Got you out here at 523. 523 on QQQ. Now, did I get out at 523? No. No. I'm looking to add. I'm a long-term investor. So am I getting out now? No. For me, it's too late. Might not be too late for you. But this just looks like a dip to me. And there's a reason for this dip. We'll go over all of that. But if you want my 4-hour algorithm, Trendspider is on sale right now. 50% off. St. Patrick's Day sale. Go over to Linktree, linktr.ee/dailystockpick. Right here, the second one. Now, you have 14-day trials here for as low as $10 freaking dollars. $10. Okay, you have standard, premium, enhanced, and advanced. You get different things. This advanced one for $25, you get up to 52 trainings per year. Okay, when you sign up for the yearly, you get up to 50% off your first invoice. 50% off. So go ahead and try it. To get my 4-hour algorithm, you need to sign up for a year. That's the goal, because you can't use the formulas that I give you in 14 days. You can't understand this stuff. You're just going to start getting used to the actual software program in 14 days. But for $10 or $25, it absolutely makes sense for you to try it. Because if you're scared of what's going to happen, understand technicals. You can see we're at 472 right now. The first line of defense is 448. Where did I get that one? Previous all-time high. Multiple weekly candles that hit that one. Okay, and then you pulled back here in September 2024 at a low. You pulled back to 448, 449, the week of September 2nd and the week of September 9th. That's how I got it. Now, your MACD has come down. Yes. Will we see a positive day today? I don't think so. We've already given up. There were big gains last night in the pre-market, and we've given those up. So make sure you have a technical strategy. Make sure you have a fundamental strategy. We'll go over the fundamental strategy in a little bit, and that's to find stocks, good stocks with good profits, with good products, with good management that are good to buy right now and are on sale. Okay? Again, 50% off for St. Patrick's Day on Trendspider. Let's talk about yesterday. NASDAQ plunged 4%. S&P drops 2%. We crashed. It's not enough. This is about, we were 1% away yesterday from hitting circuit breaker triggers. What happens when you hit a circuit breaker trigger? Well, I've lived through this. Many of you probably haven't. The market closes. So what happens is the NASDAQ will shut down for 30 minutes when you hit a circuit breaker. This is because of Black Monday that happened in the 80s, I think, somewhere around there. And it happened multiple times during the 2008-2009 housing crisis. We were 1% away from hitting that type of thing yesterday. So I don't expect us to stop going down. Trump has been very clear. Okay? Take 6 minutes and watch this video from Pomp. Okay? He's a Bitcoin guy. He's a big Trumper guy. But watch. I don't care if you don't like Trump. Watch it. Trump is intentionally crashing the market. Pomp did a great job. But what Pomp missed, he said, yeah, Trump is playing chicken with the economy. What Trump missed in this video, in my opinion, is sometimes you lose when you play chicken. If you're out there on a highway and you're playing chicken, jumping in and out of traffic, okay? You're playing Frogger. Sometimes the frog dies. And that's just the fact. So do I have confidence that we're going to actually do? I have confidence in Jerome Powell. He orchestrated the soft landing. What are we seeing now? Wednesday. We're going tomorrow. We're going to get inflation data. If that inflation data shows that inflation is up and we're crashing the market to get interest rates down, that's not good because the Fed has two mandates. One is inflation. Two is the jobs market. And if we see the job markets go to shit, then you've got inflation and the jobs, and they need to raise rates again. I don't necessarily disagree, and I'm shocked that I'm going to say this. I listened to Jim Cramer last night. Well, I've got notes on that as well. But Jim Cramer last night said it well. I don't disagree with what Trump is doing. I just disagree with how he's doing it. One thing that you're seeing in this market is chaos. And you saw it last night. Okay, we'll get to Delta. But Delta, 15, 20 days ago, their earnings, Delta said, we're going to have the best 2025 ever. And then what happened last night? Shit. Business customers and consumer customers are down. So take 6 minutes and watch this video, okay? Understand, I don't think that we're down. The S&P dropped 2%. The NASDAQ plunged 4%. The NASDAQ plunged more because guess what's big in the NASDAQ? It's Apple. It's Nvidia. It's Microsoft. Those are the top 3 market cap companies weighted in most ETFs, and those were down. So this is your test for risk tolerance. If you can't stand it, make sure that your portfolio is set up. Make sure you have a strategy. My strategy is buy and hold. Am I the best protector of capital? No. But I trust my process. Now, the 4-hour algorithm said to get out on the Qs. It said to get out on VOO. Did I? No. Because I don't believe that the economy is broken. I do believe that we end higher. But look at these monthly candles on QQQ. The monthly is even worse than the weekly. We haven't reset. The 50-day is down at 374. You're looking at the previous all-time high here in December 2021 at 404. That's going to provide some support on the monthly. And we're still way away from that. I mean, that's 20% down from where we are today. Now, Trump has been clear that first-term Trump was focused on the stock market. I do not believe for a freaking second that this fucker's not watching the damn stock market. Okay. He says he wants to make things more affordable. He wants to continue spending in the government. So he wants interest rates down so that he can continue to spend. The reality is the government will need to cut spending at some point, and it's going to need to make some difficult choices in defense and in entitlement programs, meaning Medicare, Medicaid, and Social Security. It will need to make some changes. And right now, Trump doesn't have the power to make those changes because Congress will not push them through, and he will fail. So what you're seeing right now, you know, the S&P and QQQ were up in pre-market. We're now down in pre-market. So this is a COVID-style crash. What you're seeing in COVID, look at this monthly candle, okay? In February of 2020, we're just going to highlight this little portion right here. I'm going to take this and we're going to just do 2020 because in January, you started and then you went up. And in that little bit right there, okay, that little bit that you see, that's COVID. And then we soared. Is this what we're seeing with COVID? I don't know. I don't think so. I think it's going to be more extended than COVID. COVID, you had 1 month, February 2020. You had the second month, March of 2020. And then the third month, April of 2020, was an 18% gain. That was when all of the markets worldwide, all of the governments started pouring money into the economies. You see it. Germany is now pouring money into their economies. This is crazy. And I don't mean to scare you because I am not making many changes to my portfolio whatsoever. I am down significantly. I think I was down like 4 or 5, maybe even 6% yesterday. So I was down big. Doesn't mean that I'm panicking, but I am in a different financial situation than most. If it made you nervous and your risk tolerance isn't there, then do not do the buy and hold method. Go and get VOO. Go and get QQQ. Go and find some winners. Scan for some winners. But understand this video right there with Pomp, he's telling it like it is. And then Treasury Secretary the day before, he's saying it won't be surprised if the market is down 20%. They are forcing a recession. He basically said, look, the market was up 20% last year, 20% the year before. Did the Biden administration succeed? The American people weren't buying it. So they're going to call Biden faking the economy by spending so much money and putting money in. And then they're going to blame Biden for what they have to do. It's not a good way. It's not going to feel good, but you're going to see more chaos and more volatility. I've told you before, the VIX, I am not putting money into the market until the VIX gets under control. And right now, only down 0.47, it's not under control. At 25, I may start adding. At 27, I am not doing anything in this market. At 27, I may actually start to trim some of my very long-term holdings that are up there. Like, let's take Apple. I don't want to sell Apple at 225, but will I? Maybe. I mean, look at the weekly. Have we gone down below this 200 level? No. But you're down in this lower part. This is typically where I wanted to buy. Maybe I'll start adding to it. But maybe I'll start just taking money off because I do believe that they are going to crash the market. And I believe that we're going to see it will be a once in a lifetime opportunity to buy back in, but you're going to have to do this strategically. So make sure you have a plan. Will I be the one to tell you when to buy in? Probably not. I won't time it right. I never have. I've always missed, certain portions. I've always bought at the top sometimes and waited for the top to come back. But again, QQQ may be having a COVID-style quick downturn and then a quick upturn. And if you look at that, if we just go back and we look at, we'll look at a weekly in 2018, it didn't feel good. 2018, you can see the weekly much longer than it was. Right now you're seeing what in 2020 right here. You see February 17th. That's 231. Where did you get down to? 168. That was about a 4 or 5 week period. We're 2 weeks into this. 2 weeks into this. This is the third week that we're into this. So we could see quite a bit down. The bottom for momentum factor may be in sight. Maybe. The momentum factor, he sees potential for factors rebound the NASDAQ NDX tumble, the tech concentrated NDX. Again, look at the iShares momentum factor, MTUM. Number one, Apple down 4% yesterday. Meta down 4%. Nvidia down 5%. Broadcom down 5%. JP Morgan Chase down 4%. Large cap stocks got killed. Didn't matter what sector you were in. You know, we can go and look at the market data and we can see the only one that was positive, well, two, utilities and energy. That was it. Very defensive, super defensive. You know, you look at 1 month and the only ones that are up, consumer staples is up 3% over 1 month. But the consumer's getting killed. Year to date, what's leading? Healthcare, defensive. So momentum and growth is what absolutely got killed yesterday. Some of the biggest market caps, Apple, Microsoft, Nvidia, no matter what market is going down, these names should continue to lose. Now, expecting a relief bounce in the NASDAQ tomorrow, history is on your side. I don't see it. I see panic selling right now. And if we get some type of trigger, the circuit breaker trigger, I think you're going to see even more panic selling. And I think that's not what Trump was anticipating. Cramer said last night, there is no more Mag 7. He doesn't like any of those names right now. He was spouting off about how the market will go down, doesn't have a chance of going up. I don't know. Maybe that's a bottom. Maybe that's the Cramer bottom is what we're going to call. When he said there's no hope, maybe that's the Cramer bottom. But we are down in pre-market. So while the numbers predict positions 30, 62% winners, average win 2.45%, maybe. I just don't see good news in the market. So the S&P is getting dragged. Morgan Stanley says the upside support may be near 5,500. Okay. The benchmark's 55.96 level during Monday's trade, seen as less than 2% away from 5,500. Morgan Stanley held on to its 6,500 year-end base case price target. That is SPY. So if we just take the last number off that, that's SPY. Where are they seeing it? 550. We're still 10 points down from there. In pre-market, it's at 560. So you're at 560 pre-market. Now it looks beaten down on that 4 hour. Doesn't quite look beaten down on this this weekly. But they're saying 550. If I put a line at 550, where are we? Look at that one. 550 puts us right here. We're just going to move that down to 550. Right there. Doesn't look to me like there's a hell of a lot of support there. Looks like there's more support at 560 where we're actually trading, which was a previous high in July. So, but I do see a bottom at about 535. So if you're long term, I would say take a look at some of these articles. 3 factors. The 10-year is down 50 basis points since mid-January. Weakening dollar. A strength greenback was Q4 earnings season headwind for multinational companies, but that has now reversed. With the US dollar down about 6% since mid-January. Again, a strong dollar isn't good for multinational companies. Seasonal for earnings revisions and index performance should improve in March. Those are 3 factors that they are pointing out. That's good news for the market. But again, I think they're reaching for straws. Seeking Alpha analysts mixed on when stocks will rebound. Okay, where can we see that? We have CPI on Wednesday, like I said. That's what, to become bullish on equities once more, we believe the Dow, S&P, and NASDAQ 100 have to retake their respective 200-day moving averages and turn those levels into support once again. That's going to be key. If we take this and we look at a daily on SPY, we've lost the 200-day. If we take a look at QQQ, we have lost the 200-day on the daily. And if we take a look at the Dow, DIA is the ETF on that one. If we take a look at the Dow and we take a look at the daily, we've lost the 200-day. Okay, the Dow was the last one hanging on to it. So you want to make sure you understand your technicals. You want to understand if you're nervous, there are ways to go around this. Now, yesterday, biggest stock movers, okay? Trump said he's buying Tesla to support. He posted on Truth Social that, hey, people are unfairing. They're boycotting Tesla. Don't create chaos. If you're just a dude, yell at Elon. Don't destroy things. Personal property is personal property. Don't be a dick. I didn't buy a Tesla for Elon. I have many liberal friends who work over at Tesla. It's not just Elon. Whatever you think about him, protest him. Call your representative, but don't do damage to shit. And Trump said he's buying. Now, here's the thing. This was up 5%. It's now up 0.5%. You're losing steam again. Now, what's my strategy on Tesla? It's very simple. It's the 4-hour algorithm. Take a look down here, okay? Just to the left of my head. There is it says performance chart, 148% versus 13% asset performance, okay? This is back tested for 2 years. You can see it right under my head. Data analyzed for 24.7 months right there. Net performance all. That is the 23 positions of the 4-hour algorithm. You can see it right here. Gets you in here at 217. Gets you right out. Gets you back in at 259. Okay? 60% gain. You have erased everything since the election. But the algorithm got you out. So you wouldn't be in. So for the past 2 years, you've made over 23 positions, 148% profit, and you are out. You are not in this stock. That's the 4-hour algorithm. If you bought and held, you made 13%. Now, I bought and held because I have made this mistake plenty of times before, and I wanted to buy and hold. I didn't listen to the 4-hour algorithm. At this point, I think it's too late to sell. I'm going to buy more when the 4-hour algorithm gets me in. And then I'm going to listen to the 4-hour algorithm because the stock for me is too volatile. I own this through XLY. But again, clearly, biggest stock gainer, it's not one today. Then you have the biggest loser, okay? Most of these are earnings related. Delta Airlines, Asana, Kohl's, Redwire. Asana, Redwire, and Kohl's, it's all earnings related. It's all announcement related. But Delta Airlines, I want to point out something from Delta Airlines, okay? This is from January 10th, 2025. It's not, 2 months ago? Delta stock soars as its CEO predicts 2025 will be the best financial year ever. And then you have something from yesterday afternoon. Delta Airlines shares slump after lowering Q1 guidance. Boy, is there any insider? Let's go and take what's happening now. Let's look at some insider. Let's get rid of the thing. All insider trades. Okay, we're going to look at insider trades. And we're going to put a little filter in here. We're going to customize it, and we're going to filter, and we're going to say, we're going to say name, and we're going to say, you know what? Let's do symbol, and we're going to say DAL, and apply, and we're going to get rid of that one. Let's see. Let's just look. When was last sales? Oh, February? Sell? EVP? I mean, he sold. February 11th, sold, awarded, sell February 5th, sell January 22nd. There's a whole lot of sales in here from insiders, a whole lot of sales from insiders in the middle of January. Boy, that's kind of interesting, isn't it? They kind of tell you, hey, earnings are great. We've got great earnings. January 8th gets you in here at 61. Boy, it travels all the way up to 70. And then they warn right after their earnings. Boy, consumers are down. We're having problems. Come on. Airlines are airlines. This is why I don't own them. This is why I trade them. They slashed their Q1 guidance due to domestic softness. United American also lower. This is why I don't own airlines, because they manipulate crap like this all the time. I just don't like it. So, scanners should be your friend. Okay, looking at our top picks from the relative performance 30-day high scan today, you wouldn't even know the broader market is getting killed. New highs: Verizon, McDonald's, Kroger, NSP. This is all from a scan. Scanners are your friend. In fact, I just did a ton of scans in the 4-hour algorithm for you. I will provide them in the newsletter today. There are stocks that are on their way back up. You want to find bullish stocks. So in the newsletter today, I'm going to provide you in the free newsletter scans that in the 4-hour algorithm. I scanned watch lists, I scanned alpha picks, I scanned the Dow, I scanned the NASDAQ, and I scanned the S&P. So I will put that in that. Scanners are your friend. Understand, with Trendspider, you get to scan for these things. Look at these stocks. Look at Verizon. Look at McDonald's. Look at Kroger. Look at NSP and Sperity. All-time highs. And they all were scanned using their relative performance 30-day high scan. And scanners are your friend. Now, I found this interesting. JP down since 15% since Jamie Dimon and insiders cashed out $250,000 at all-time highs. And he was warning about it. And it's not just JP Morgan, it's Goldman Sachs. Goldman Sachs CEO David Solomon made his first sale in 3 months at the end of February. At the end of February. And you can see the insider sales right there. One dude bought here. I don't know who it was. I mean, we can go over and look. Let's see what's happening now. And we can customize this filter. And we can say, okay, the symbol, Goldman Sachs. Let's just apply it. And we can go and look at who, I'm not going to put it up on my screen because I personally don't like those things on my screen. But you can put it on your screen just like they did. You can put it on your chart. But if we, let me see. Goldman Sachs. No, equals. We're going to say equals because, yeah, there we go. David Solomon, Wednesday, February 26th, sold $1 million worth. Alex Galton sold. Who's the one who bought? Kevin Johnson. Bought $1 million worth, $1.4 million worth. So again, make sure you have a strategy. Make sure you have these things alert. Understand what the stocks in your portfolio are doing. I don't own either one of these. Goldman Sachs is in the core portfolio. Warren Buffett, we talked about it. Did Warren Buffett know some of this insider information? Did he have anything? Because this dude's sitting pretty. He is sitting pretty right now. Sitting pretty in his, $300 billion in T-bills. So let's talk about Apple, because I do want to point out Apple. I have a note in my notes right here. Apple's down in this weekly range that I've highlighted. And here's the thing. I highlighted this resistance right here at 200. Double top right there. We blew right through it. Okay. So 220 doesn't feel horrible to me. But yesterday's, this week's 5% loss, today it's down another 1.5%. It does feel bad because we were at 240. Okay. This one was higher than it should have been. And then what happened was it came out, hey, we're reducing our iPhone estimate. The valuation is extended on this one. This has been well known. It is extremely extended. But am I getting out of this one just because it's down 4 or 5%? No. I'm looking to add to this one. Do I want to sell at 220? No. Will I? Probably. My average purchase price is like $1. So I may want to save some in my retirement account. I'm not going to take a tax hit. Because I don't, I have my tax stuff all planned out for the year. But in my retirement account, maybe I want to sell a couple $100,000 worth, raise some cash. I have a large position in Apple. Does that mean I don't believe in Apple? No, it just means that the valuation is extended. What does Wall Street think that this one's worth? They think it's worth $252 and you're only 12% off. But what's the catalyst to get it back up? Is it WWDC like we saw last year? Last year during this time, you can see what were we doing last time? During this time, we were heading down in Apple. You were heading all the way from 188 down to 165. And so when you get under that 9-day, that's been a decent time to buy. But I don't know what catalyst is going to bring it up back up. Tesla, same kind of thing. What's the catalyst that's going to bring it up? Where's your strategy for Tesla? For me, it's the 4-hour algorithm. But Tesla, it's done great, but it's getting killed. And if you just look at a long-term chart of Tesla, you can see we've just gone sideways all the way since 2021. It hasn't gone up. It's the valuation. You know, you think that Apple's expensive at 26 times forward earnings? Look at Tesla. This is 79 times forward earnings. Now, you're not trading Tesla on the earnings today. You are trading Tesla on its robotics and its automation. And so it's not a car company. But you better believe, you know, Elon better get out of that whole political mess. And that's just my thing. Now, I do have a thing in here. I didn't do it, but let's look at this, okay? We want to look at SPMO, which is the Momentum ETF, Invesco Momentum ETF. And I'm going to select symbols. And this is what you can do. This is the Momentum ETF versus SPLX, which is SPLV, which is the value. I'm sorry. I'm looking at my notes and I can't really read. So SPLV, which is the value. And we're going to take out the S&P 500. And we're just going to look at these two, okay? Because this is momentum versus the value. And value, you're seeing value's continuing up. And you look at year to date and they've crossed. Okay? Shorter term, you're looking at and they've crossed. 1 month, value staying about the same. Okay? Momentum has just crashed. And you're looking at 1 year, look at that. It's coming back down. 3 year, we got a lot to go. Now, what's in SPLV? What's the top holdings in value? We can go and look. The holdings in value, Coca-Cola, it's done great. Marsh & McLennan, done fine. Berkshire Hathaway, it's held up. It's 1%. Again, this is the low volatility index. It's 102 names. So you want to take a look at these things. Now, Alpha Picks, 85% of Alpha Pick stock delivering earnings still beat. They beat earnings. Multiple drivers of uncertainty, including inflation, tariffs, interest rates, and rising recession fears, have created a challenging environment for investors, leading to a shift to risk-off assets. 75% of S&P companies beat earnings estimates. Okay, the index is tracking towards its highest year-over-year earnings growth since Q4 2021. The contrast between strong financial performance and current stock prices underscores a recent decoupling in the market where fear and sentiment is driving market dynamics. We're in fear. Understand, if I just Google CNN fear and greed index, let's just Google that. It's right here. We are in extreme fear. You're in extreme fear. So understand, in spite of sentiment, 85% of Alpha Picks have exceeded earnings expectations, easily beating the S&P 500 of 75%. Recent reassurance from the Fed could suggest that it is a good time to hold high-quality stocks. You want high-quality stocks. And so look at Alpha Picks performance, 118% versus the S&P up 48%. Okay? The performance sucks near term. And I know people are like, well, what are you doing? I'm doing nothing. I'm just looking at this. 6 months, the Alpha Picks is up 4%. The S&P is up 2%. 1 year, Alpha Picks is down 5%. But you look at this, in my mind, when I look at this portfolio, I like it. I like it a lot. And so it's still good companies with good earnings, with good products and good management. That's what this portfolio is. And it's small caps. It's not in my wheelhouse. That's why I like premium. You just saw me look at value versus momentum. Use premium and Alpha Picks as a tool to manage your portfolio. That's why I like this bundle. How do you get this bundle? How do you get $159 savings? You go over here and it's the second link. If you just want premium, and you don't want alpha picks because the portfolio isn't something that you want, just get premium and you get $30 off and you get a 7-day free trial. Okay? But I like alpha picks. That's why I like the bundle. Now let's talk about Oracle. Oracle but they missed. Yesterday they missed. And they're getting killed today because of it. Okay? It was a double miss. But there were some really good things in Oracle, okay? This is the Oracle targets fiscal 2027 revenue growth of 20% driven by cloud and AI expansion. Oracle, I think, is a buy. It's a buy the dip. When am I going to buy it? When the 4-hour algorithm tells me to. Because this one is re-rating its value. Okay, if we go and look at Oracle in the quant, I think it's going to be a hold right now. Yeah, it's a hold. The valuation's still expensive. You can see it. The growth isn't there, but they just announced growth and they're expecting growth. This was just done today. So we can see competition, Microsoft, Salesforce, SAP. Growth in their cloud division was huge. It just wasn't what the street wanted. And so when you look at this, Oracle's involvement in Stargate AI infrastructure positions it to be significantly boost its cloud revenue, which it did, potentially reaching $109 billion in revenue. Okay, Oracle stock is currently considered moderately overvalued with high valuation metrics such as price to sales, not aligning it with revenue growth. This gives you all that you need to know. Now, what does Wall Street think that Oracle's worth? $187. I guarantee you they're going to chase this one down. There are, 36 analysts that cover this. There are 18 that consider it a strong buy. So in my mind, I don't think that this one comes in as, oh my God, throw out the baby and the bathwater. Dan Niles puts it perfectly. Oracle, while missing revenues for the quarter, guided full year 2026 revenues plus 15%, where consensus is 13%. Full year 2027 plus 20%, where consensus is 14%. This was the best outlook by far of any major hyperscaler after revenue estimates went lower for Amazon, Microsoft, and Google following their results. Benefits from Oracle's close ties to the current U.S. government and recent Stargate announcement with OpenAI are clearly helping their outlook. It's all about outlook, and the market is ignoring that. So if you have a long-term outlook, find a plan. I think Oracle is one of those that I like. And here, Kathy Woods. Let's see. Growth is coming. Remember. Oh, this is it. My point on this. Okay. Kathy Woods and ARK Invest bought Palantir, Hood, Coin, AMD. They bought a bunch of Tesla. Okay. There are trackers out there. Have a shopping list available of what you want to buy. Good portfolio managers have that list available to them. If there are, I've said this before, have 5 stocks where if it drops 5% or more, you don't ask questions. You don't look at a chart. You don't look at the valuation. You just freaking buy it. And so in my mind, I think there's a lot of things on sale. But right now, you can't hold any gains. It looks like there's a lot more green in the market now that it's opened up. We're at 940. There's a lot more green in the market, but Apple's down 1%. Amazon's up 1%. Dell is up 1%. Dell is at $91. Dell is at $91. This has been a fall from grace for this. It's still a good stock. And you can see on the weekly, we have abided more by this downward trend than the upward trend. There is a lot on sale. Now, one thing I want to point out, Google and NextEra Energy. NEE was up 5% yesterday. Alphabet CIO, Chief Investment Officer, touts small nuclear reactors. NextEra Energy Chief sees opportunity for co-location. It's an opportunity. Is NEE one that you want to buy? Well, it's down 1.43%. What does Wall Street think that it's worth? They think that it's worth $84. This is nuclear. NextEra Energy. This is a utility. It's 13 out of 40. What's the number one? Excelon. Look at that nice little rise right there. This has been a strong buy. Let's see. It's been a strong buy since $37. You're trading at 43. 37 was just in December. So there are stocks that are up in this market. You just need to make sure that you have your list available. One of the lists available might be when you scan. Okay, when you use a scanner, you can find these things. I just used the 4-hour scanner to find entries in the 4-hour algorithm. Well, you know what? PPC, Pilgrim's Pride Corporation. This is an alpha pick. And what does it do? I told you it's based, the 4-hour algorithm based on the MACD. Well, you can see the MACD came down, crossed back up, algorithm gets you in. It tells you today, you've got another entry to buy. It could be going higher. Could be going higher. MNSO. This is a previous top 2024, top 2025 stock. You're seeing it going down here. Would I buy this one? No. The 4-hour algorithm doesn't work. It loses you 29% versus 5.9% buy and hold. But earnings are coming up. Is this one oversold? Well, look at the weekly. You're still above the 200-day. If you bought this one at 20, maybe you put 16 as your stop loss right there. Maybe it pumps back up. MNSO, let's look at this one. But you have to have these scanners available to you. MNSO, let's see, valuation, it's still expensive. Still expensive. It's got a D. Revisions, a 0 up, 8 down. Revisions don't look very good. Let's see what Wall Street says. Wall Street says it's $25 stock. Maybe this is consumer discretionary, broadline retail. 21 out of 27. JD.com is the number one. JD.com is the number one. It's a strong buy in the quant, strong buy on Wall Street. So this is how the rabbit hole kind of gets you down. A spider sector that has an entry into the 4-hour algorithm is XLE. This is energy. This one's come down below that 93. Now, we've hit that 93 several times. But if you buy at 88 and you wait until 93, maybe that's a good thing. But you're seeing it just trade sideways here. It's not going anywhere. Where did that 93 come from? It came from 2022, where the energy sector just shot up. And now it's just trading sideways. But you get, some of these names in XLE. If you go over XLE and we just look at what makes up XLE, well, it's Exxon. 22% of that is Exxon. Is Exxon a good one? It says it's a strong buy. I'm telling you, at some point, Exxon gets to 120. That is a $110 stock that will get to 120. What does Wall Street think that it's worth? 129. It will get to 120. And it just turned into a strong buy. And Exxon is in the core portfolio. So you have to make sure that you find these stocks and you find what's available. But again, hey, and by the way, yesterday, I guess you guys missed me. I don't know how this works. Spotify sends me this crap all the time. 500,000 plays yesterday. Hey, thank you for listening. I appreciate you. Hopefully I provided you some guidance. But yeah, I'm going to, by the way, tomorrow, I do have an appointment in the morning, so I probably will do a later podcast. But just understand, I don't think that we're done going down. I don't think today is the start of the upward movement. If you look at QQQ and we just pull this one up and we look at a 4-hour, your 50-day it could be making a death cross. Okay. On the daily, it's still above, but it's still negative. Your 9-day still negative. Your 21-day still negative. I think we still have negative markets. I think you want to look at when we retake that 200-day. And that 200-day on QQQ right now is at 491. We are well below that at 474. And I don't think that today, even if you get gains today, I don't think that today is the start of a turnaround. I just think that they don't care about how low this market goes. They want interest rates to come down. They are willing to give up the stock market to get interest rates down because it's clear Jerome Powell and the Fed are data driven. And if they can drive the market down, if they can drive markets to the bottom, and they can get that 10-year under 4%, remember the 10-year is key. If they can get this 10-year, it's at 4.22. If we just look at the history of this one, you can see in January, it started coming down. This was the telltale sign. So you're going to see this one come back down under 4%. You still got a ways to go. That is a long, long way to go. When was the last time it was under 4%? It was September 2024. And that was the start of that big bull run, but they want it down there. And where were you in September 2024? Let's look. September 2024, you were down at 448. Where does it want to be? It wants to be at 448. So we still have more downside to go. And if I'm wrong, then I'm wrong. But the reality is I'm not moving. I'm not panicking. I am long-term. I am sitting in the stocks that I have. If I have some that I'm nervous about, I'm getting rid of them because I think that we have more downside to go. But that's an individual stock and an individual portfolio manager's decision. So hopefully I've given you some things to think about. And hopefully you're not worried, because I'm not. I do think that by the end of the year, we are higher than we are today. So if you wanted to buy today, do it. Just don't go balls deep. Remember the stairs. And I got some comments about the stairs was a good analogy. The stairs up. These are stairs. These candles are stairs. They go up and then they'll come back down. And it's not an all-in-one. And you're seeing, yes, this looks, from February 20th, it looks like it's an all-in-one kind of thing. But you're not going to see this one go all-in-one back up. There is just nothing in the economy right now that is going to point to a huge catalyst up. We've already got the NVIDIA earnings. We've got inflation coming out tomorrow. You know, even a Fed rate cut will not take all of the risk out of this market. That's what you're seeing. It's risk. It's extreme fear. Do you want to enter in? If you're a long-term investor, I would urge you, try and start to get in. But this is why you have capital on the sidelines. This is why 5 things, if I had to relearn today, the number one thing was I'd have a job, because I need to have capital coming in order to invest. I am lucky I sold a bunch of Apple that I have not reinvested. I've got hundreds of thousands of dollars sitting on the sidelines, if not millions. I've got a lot of money sitting on the sidelines. So if you have any questions, hit me up. Everything's on Linktree. Remember, St. Patrick's Day sale. Get your charts. Understand your charts. One of the things that I'm going to post about is if I had to relearn everything it lost everything and I had to relearn everything that I knew, lost my mind and my memory was gone, I'm going to go over all the chart stuff for the paid subscribers. So I'll have a couple of paid subscriber stuff over the next couple of days. It's going to be a couple of good ones. Okay, take care. See you later.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.